Welcome to Basics of QuickBooks Online. This training is being hosted by Grow South Dakota in partnership with the SBA. Our trainer today is Kelly Weaver of the Small Business Development Center and Grow South Dakota. Kelly, I'll have you take it away.
Great. Good morning, everyone. My name is Kelly Weaver. I am the Regional Director of the Small Business Development Center. Our program is statewide. Actually, it's national. So if you need some help with starting a business, growing a business, buying or selling a business, we provide free and confidential business consulting services in that area. My office is located in Aberdeen, and we serve the northeast corner of the state, about 13 counties from Aberdeen office. But we have 5 other offices in South Dakota and offices across every state in the country. So if you're not in Aberdeen, or if you want to find a center somewhere else in South Dakota or even in somewhere else in the country, we are funded in part by the Small Business Administration. So you can go to their website, sba.gov, and click on the local assistance tab, and that will connect you with any SBDC office in the country. We will have our contact information provided at the end of the slides today. And as Mark mentioned, we'll be providing a recording of this event as well to all who have registered. So with that, we're going to get started. And I am going to share in the chat 2 things. As part of our relationship with the small business development centers in the country and with Intuit, the maker of QuickBooks, we do have access to a few discounts that are a little bit better than what you're going to find online. I know when you go online to QuickBooks.com to buy product and to compare product, they offer a 50% discount for the first 3 months. Most of the discounts we have access to are 30%, but they are for 12 months. So it's a little better deal. And you can buy a monthly subscription or you can buy an annual subscription. So there's discounts available. The website is sbdcfinancialtools.org. And again, I'll put that in the chat here briefly. Today, we're going to be using a sample account. It's called their test drive account. I'm going to include the link to that too. You don't have to log in. You don't have to access this account right now, but should you want to play around in QuickBooks before you actually make a purchase, if you haven't already, the test drive account is a good way to just go test it out. It's an actual sample company that has actual data in it. You can go in and make transactions in it. But it doesn't save your data. So when you log back into that test drive, it's back to square one where it started. So that's the tool we'll be using during the training today. The goal of this course is just to provide an overview of the features and functions of QuickBooks Online. Again, we'll be learning by watching. So I will bring up the software live on the screen and kind of walk you through using that. And I will put the discounts in the chat at this point. Okay, so now you should be able to see my screen, and we are in Craig's Design and Landscaping Services. So we will start with that. Just a bit, I always like to start out a little bit and talk about the difference between QuickBooks Online and QuickBooks Desktop. For those of you that maybe have been QuickBooks users over the years, Desktop was their initial product that is still offered to those who have had existing subscriptions, but you can no longer buy a new subscription to QuickBooks Desktop unless you're buying the very high-end enterprise software, which is for mid and larger size businesses. So mostly what you will see if you're going out to purchase QuickBooks today will be the online software. If you've used the desktop software and you're now looking at this online version, they are very different in appearance in their user interface, but accounting is accounting. So the back end processes are still pretty much the same. It's just how you get there looks a little bit different, and we'll walk through that in the class today. Just keep in mind that the online QuickBooks Online is for one company only. So if you have multiple companies that you're doing books for, you have to have a separate license for each company. And those of you that have used desktop in the past, you know you can support multiple companies with that desktop software. Your data is stored in the cloud with QuickBooks Online. You have to have an internet connection to connect to it. So just keep those things in mind. So when you first set up your QuickBooks company, it'll ask you a series of questions, kind of an interview process. And what it's really trying to do there is set up the company that's in the manner of how you're going to use it. If you don't have employees, then it won't have some of those functions on the screen, so to speak. So it kind of keeps it a little bit less cluttered if it's hiding things that you're not really using. And so that will be set up in your initial preferences as you go through setting up your account. We'll talk about how you can change those preferences as we go through the training today. Because companies do grow and change, right? So you might not have employees to start with, but eventually you may. The online version will also prompt you to connect your bank account. It kind of pushes you that way. It kind of makes it think that you have to do that. You do not have to connect your bank account if you don't want to. There are pros and cons of doing that, but it is something they kind of like, it's like one of the first things they have you do. And if you're not comfortable with it or you're not sure, you can bypass that and still use the QuickBooks Online account. And we'll talk more about that later also. One nice feature about the QuickBooks Online function is you can invite an accountant and it is a free user. So depending on which version of QuickBooks Online that you have, will depend on how many users you have. So the very basic, what they call simple start, it's only one user, but you can still invite that accountant user. So because it doesn't count as the one user. If you go up to the next to the essentials, you have 3 users that can access that, plus your accountant user. How QuickBooks Online is designed is it is the basic framework, but there are different apps that you can add to it. And you'll see this little apps button down here. Things like the QuickBooks Payroll is additional app. There's a Shopify connection. There's inventory. There's all kinds of things. And I'm not going to have access to all those through this sample company. But if you go to the Find Apps, you can say, what do you want? It pops up some of the most popular ones. So you can just browse categories or industries to see if there's some other apps. If you're finding there's pieces of this that don't do as much as you want it to do, there might be an app that you can add. Typically, those are outside of QuickBooks, but if you're accessing them through this portal, they've been vetted by QuickBooks, so that's great. But they also are different. Most often they have their own separate subscription charge as well. They're not free. So just keep that in mind. If you are bringing in data from a QuickBooks desktop, there is a way to bring that data into your QuickBooks Online account and migrating from one to the other. And there's the SBDC financialtools.org website where the discounts are. There are some tools for migration as well from desktop to online. So those could be some good resources if you're in that situation. So with that, let's kind of dive into the software and look a little bit about what QuickBooks structure is, what the menus look like, how do you get around in QuickBooks. Here. So in QuickBooks Online has 2 views, and I'm going to click on this little gear icon. You can see there's an accountant view, which we're in right now, and a business view, which we're going to go to. The idea is that the business view is a little bit more common language and the accountant view is a little bit more accounting language. But I know they're in the transition of kind of getting rid of that. And when I was playing around with this yesterday, I didn't really see a difference between the business view and the accountant view. So it might be that they have made that transition here. And I'm not sure why they still give you the option if that's the case, or maybe it's not fully transitioned, but just keep in mind that that's probably going away.
Kelly, we are still seeing the screen of the test drive for QuickBooks
Oh,
Online.
okay, okay. So let's. All right, is that better?
Yes, you should be good to go.
Okay, good. I think I moved it from one screen to the other after I shared it. Probably a no-no. Okay, so how do we get around in QuickBooks? That's probably, if somebody making that transition from desktop to QuickBooks, that's one of the frustrations. I don't know where to go to find anything, right? So here what you'll see is our dashboard. This is probably where, when you log into QuickBooks, where you're going to start out. And this dashboard can be customized. You can see it's got some kind of reminders of things that are overdue. It's got bank balances. It's got a summary of your profit and loss, expenses, cash flow, invoices. All these little widgets here can be customized. So if you don't want that widget on there, you can get rid of it. And maybe there's something else, so you can customize that layout there. So this is your dashboard, and that's kind of like home, if you will. And again, customize it to where it makes sense and where it's helpful to you. How do you get to do new work? Well, there's a couple different options, like there usually is in QuickBooks. There's always more than one way to do something. But the easiest way is the new button. If you click on new, it's going to give you all the different things that you can do depending on if you're dealing with customers, vendors, with your team, or other things like bank deposits, inventory adjustments of that nature. So that's probably the quickest and easiest way to get to a new transaction that you want to enter. You can also go to transactions or sales or expenses, and you can enter items that way. So if we go to sales, for instance, we're going to have an overview, and we can do some quick actions here where we can create a new invoice or create an estimate. If you go to the sales window, there's also new transactions over here where it can give you options of new transactions that you could enter. So there's lots of different ways to get around. And as you work in QuickBooks, you'll find out which way works best for you. Just don't be confused. If you enter it here, you don't have to go anywhere else and re-enter it. Once it's entered no matter which way you came about doing that. This sidebar menu here, if it gets in the way of your screen area and you want to hide that, all you have to do is click this little 3 dots or 3 buttons up there, and it hides it so you have a little more screen space to operate. And then if you need that to navigate around, you can open it back up again. The gear icon up here is kind of like your settings and your preferences. This is where you set up QuickBooks to operate the way you want it. So in the desktop version, when you edit your preferences, this is kind of where you're going to do that same thing. So you can click on account and settings, for instance, and you can have different, put your company name in there, your company type. You can look at sales, and you can put in preferences about your invoice terms, shipping, discounts, any of those types of things, your products and services, how you're handling those, late fees, progress invoicing. So if you want to change any of those, you just click on the gear icon and you can make changes. So what I would always encourage someone to do is go into the account and settings and click through each of these tabs to make sure that this is set up the way you want. And again, some of those things will be addressed in that initial interview, and it'll turn these on or off based on how you answer the questions. But as things change, or if there's something that didn't get addressed in the interview and they just put it in a default position and that's maybe not what you want, you can go in and change that. Let's see, I wanted to go back to under this. We were just looking at accountant settings. There's also manage users. If you do have more than one user in your account, you can determine what level of access each user has. And you can also see your accountant user too. And I only have the one user in this version. Occasionally you'll see the upgrade button. That might mean, hey, I want another user. If you click upgrade, that means you're going to be asked to subscribe to that next level of software, which will be an increased cost. So just be aware when you upgrade, that probably means you're, moving to that next level, which is great. It's a great way to say, I don't know exactly what level I need. I'm going to start simple first. And if I find that this level doesn't give me everything I need, then I can always upgrade to the next level and all my data stays and comes along with it. It's just that my subscription price has changed. And now I have access to some more tools. Again, if you're not sure which version works for you, if you go to quickbooks.com, you'll get a nice comparison of each of the different levels and what functions they all have. And you could say, oh, well, I know I need 3 users, so I can't use the simple start because that only has 1 user. You might be able to make an initial determine what's the best subscription to start with from that, and then change it as you need to down the road. Also under the gear icon, you can change your customize your forms. You can add your logo, your address would come from your company address, but you can change how they're laid out. You can do those customized templates for color, logo, and other redesigns. And then here is where you access all the lists. You will see customer lists or vendor lists in other areas, but if you want to click on and see every list that's available within QuickBooks, that is under this gear icon also. One thing I want to just point out about lists with regard to either the chart of accounts or products and services, for sure, customers and vendors, you want to think about how you want to name these so that you have a common naming convention. QuickBooks does not recognize that John Doe and Doe, John are the same person, even though you might know they're the same person. QuickBooks recognize those as 2 different customers. So if you're consistent about how you name a customer, is it first name, comma, first name, it'll help you avoid having a duplicate customer, who's really the same person or the same company. And it will also make it easier for you to navigate those lists, because you'll know if you're looking for John Doe, you'll know whether you should be looking under the J's or the D's, depending on how you decided to organize that. So just keep that in mind. And then other tools that are here, exporting data, importing data, some, purchasing opportunities for product, audit logs, budgeting. There's just all kinds of extra things you can access there. And then your profile will give your subscriptions and your billings, and you'll know which level of service that you're providing or that you're paying for. Okay, let's go back to the dashboard. You can see this top ribbon over here stays the same. You'll always see your profile account. You'll always see the gear icon. This is a reminder. So if there's a number there, there's like a reminder that's popped up there. A search function. This is apps that you would be accessing. And then, of course, your help button. So when you click on the help button, it's going to populate information first based on where you're at in the software. Since we're kind of on the home screen, it's saying, hey, let's get acquainted. If we were on a screen where we were creating an invoice, the first things that would pop up would be related to invoices. So you can see we have the QuickBooks Assistant. This is a function of AI service that's coming into QuickBooks. So that's available, and you can ask questions of the assistant, or you can go straight to search and type in your questions here, or again, it's going to pop up things relative to where you're at in the software. So it's talking about creating company files or downloading QuickBooks Online, adding account users, kind of things that you would do as you're getting set up. So know that the help functions are there. QuickBooks has added, experts, live accounting kind of services that you can access, and the level of access to those experts vary based on what version of QuickBooks that you have. So just know that those are in there too. Okay, so let us start with our chart of accounts. And, we can find that we can go to the chart of accounts through the lists here. We can click right here on chart of accounts, or we could come under the accounting section over in this area to find the chart of accounts. Keep in mind that the plus sign is only for transactional things. It's not going to take you to lists. It's going to take you to creating a transaction of some sort. So here is the chart of accounts. And these are organized first by asset accounts, liability accounts, and equity accounts, which are your balance sheet accounts. And then after that, you'll find income accounts, cost of goods accounts, and expense accounts, which are your profit and loss accounts. So just when you're looking for something in there, you'll know where to look there. Apologize, I'm fighting a cold, so I'll try to mute myself when I have to blow my nose, so you don't have to deal with that. Okay. So in our chart of accounts, when you set up your QuickBooks account for the first time, it'll suggest a chart of accounts for you. You can import a chart of accounts. You can create your own chart of accounts. But once it's set, it's in this list here, and you can always edit it as you go along. When you see these arrows back and forth, that means that the bank feed is established. So that means that there's information coming from the bank into QuickBooks on those accounts. The accounts that you see indented are what we call sub-accounts. So on a financial report, there would be the main account of truck, and then there would be an indentation and a sub amount for each of these two categories, and then a total. It probably makes most sense if we look at some of our expenses that can, like legal and professional fees. It'll show you the individual amount in the accounting, bookkeeper, and lawyer accounts, but then it will also subtotal those to have a total for what the legal and professional fees are. So it gives you another layer of detail if you need it, that you can show on your financial reports. Or, if you want that for you, but when you give the account to, or the report to your accountant or your bank, maybe you just don't show that detail. You have the ability to roll those up and just show the one line item too. So it gives you some flexibility on how you report that information. So if you want to do something with a chart of accounts, you can click on this little down arrow. You see we're in the action column. If we want to edit it, we can edit it, which if we do that, the things we can do is change the name, for instance, add a subscription. If we wanted to make it a sub account, we just click the button. it kind of, it shows then where that is gonna show up on a financial statement. And those are the types of things you can do to edit the account. You aren't able to delete accounts in QuickBooks if there's been any transactions. So obviously in our advertising account, there are transactions that exist there. So all you can do there is make it inactive, and it doesn't count against you as far as the number of counts and the usage you're using, because that is also a restriction in the online accounts that you can only have so many accounts. And I've never run into an issue where you don't have enough accounts. Typically it's a high enough number that works for you. But if you make it inactive, then it doesn't count against you. But what it does is it keeps the transaction information that you had. So let's just say you decided not to use advertising anymore, which you probably would not do that, but you wanted to get rid of this account because you're not going to use it. So you make it inactive, but because you had been using it previously, there is transactions there. So if you print a financial statement for a period where there was activity, the account will show up on your reports. So you won't lose that data. And that's why you can't delete it. Typically, you can only delete something if there's never been any activity in it. So I can't tell you from this sample company which one that might be. But just know how that make inactive does. It kind of serves the same function as a delete, but it leaves any activity that was there. If you want to create a new account, then you're going to go up here to the top. And when you create a new account, there's two things that you, as a minimum, you have to put in here. Well, three actually. The account name and the account type. So is it an asset? What type of asset? Is it a liability? Is it an expense? Is it an income? You choose the account type, and then with the account type, let's just see if we can choose here. We have one in here that says this, but let's shoot. Hit the wrong button. I'm checking, creating a new account, merchant account fees. This is an expense account. And then it's going to suggest a detail type. I haven't quite figured out what the detail type function is in QuickBooks. I think it's just another layer of categorization, if you will, but you can choose that category, whatever you might think it best belongs to. I would put it there probably. Again, if you want to make it a sub account, provide additional detail, like fees charged by credit card payment processing, or for credit card payment processing. You can add a description in there if that's helpful for you or anyone else who might be using QuickBooks. And then we just save. And now if we go down into our expense categories, merchant account fees is there with the detail type that we added. So that is how you can edit your chart of accounts, to add something new, to edit an existing account, maybe change the description or the title different so it makes more sense to you. And then if you want to run a report on a particular account, let's just pick insurance, for instance. This will tell you for whatever period it's listed up here. So since 90 days ago, this is the activity. There's only been one payment to this account in the last 90 days, since November 14th, 2024, up till today. So that's an easy way to see the detail if you want to know what's actually included in that account. And you can obviously change the reporting period that you're looking at if you want to look at last year or next year, or not next year, last year or last quarter, whatever that last month. If you look at last year. So there was no transactions in 2024 because the only transaction we had was the one in this year, which was 2025. One 2025. So, and then you have all kinds of different columns. You can rearrange the columns. You can filter things out. You can sort by a column. So if you see all the transactions and you want to sort it by date, or you want to sort it by name, you can choose those different ways to look at the data. So now we're back to our chart of accounts. Very rarely will you ever use the back button. It's not recommended. If you're in a screen, a lot of times it'll say, take me back to, the list, or take me back to the report summary, or wherever it is. Or if it pops up another screen, there'll be an X in the corner of the screen, and we'll point that out. That's how you're going to get out of where you are to back to where you were. I think we've talked about everything there. One setting that's optional here in the chart of accounts is account numbers. So since there's no account number listed here in this chart of accounts, I'm going to assume that that function is turned off. And I wonder where we might find that. Under our accountant settings. Guessing it's probably under the advanced tab. Yep. Enable account numbers is off. So if we said, okay, we want to turn that on, then we can also, we'd want to show the account numbers. If we save, and now we go close out of this screen here and go back to our chart of accounts. There's nothing showing there right now because there's probably nobody has an account number in there. So you'd have to go in and edit. Wonder if I didn't save it. There should be a little box up here that shows account numbers. Let me see if I messed that up when I did that. So account settings, advanced. That's the one thing about the online version. Sometimes the save button. Oh. Somebody else is using this, it looks like, or they just don't allow you to do that in the sample company. That would be also possible. It's a little bit of limitations when you're not working with a live company. Okay, so that's chart of accounts. Let's talk about bank feeds. So if we go to bank transactions, let's see here. Let's try this. Oops. So normally, you would see here, let's see what it does. No, it's not. Well, this is presenting a little bit different, and I'm not sure if that's because they changed things. That's the one thing about the online version is all of a sudden the implement changes and it's different. So the one thing I want to make sure that's clear with the bank feed is just because the bank transactions are here, for instance, this one, they aren't in your data. They're not going to show up into reports until you categorize them and you accept them. So it's showing up as an uncategorized expense. I want to pick something different. It's going to suggest something that you normally use or that's common. And if it doesn't have a most used, it's going to default to uncategorized expenses, but obviously you don't want that. So now I can say, hey, I want this to go to automobile. So now it changes it so that it's in automobile, and it basically accepts it by the fact that I changed it. And once I do that, then it's in my books. If I don't know how I want to handle it yet, or I don't want to accept it yet, I can just skip this expense and it'll come back to be categorized later. So this is, oh shoot, I didn't want that one. And if you make a mistake, you can go back. So this is going to be equipment rental for my construction company. So as we're going through this, we're categorizing those things. So if we go back into, maybe I need to just close that window out. This is more what I was expecting to see. Sometimes it'll give you a little message and you just have to close out of that to get where you need to go. But this is the expense that I skipped. And so now it's showing here that it needs to be categorized. If it hasn't been categorized, it's not in your numbers. I think that's the one thing I want to make clear. And that's what gets confusing for people, because they can see the transaction is in QuickBooks and it's come over from the bank feed. But until you categorize it and accept it, it's not going to show up in your financial records. So here we're going to assign a category, or I can just review and get more detail, because that first screen is, just assign a category and you're done. But maybe you want to put more of a memo in this, or you want to add additional detail. That's when you want to click on that review tab. So this was a type of a deposit, so it's an income. So it's maybe, I don't sell books as a construction company, so maybe it's some kind of a refund. And so I would want to change that category to, maybe I bought a book on advertising, so I put it in my advertising account and now I returned it. And I got a credit somehow. I want it to go back to that advertising account. And I'd probably put a memo here is returned or refund on book or something like that. Okay, so this is the screen I expect you would see right away. Here, the for review tab is everything that's waiting out there for you to categorize, and that is right here. So you can do it as simple as just changing the category, or you can go review and get to that more detailed screen if you want to add notes or other things that are more detailed. Until they're categorized, they're not going to show up in your books. And here you can see there's 24 in your checking. If you went to your savings, there's one account that needs, or one transaction that needs to be assigned, and on the credit card 7. The thing that you'll see, and you won't, I don't see it here. Sometimes in QuickBooks, you're entering data into QuickBooks before it comes over from the bank. And when that happens, you'll get some other options here. Instead of just assign a category, you might get an option to add or to match. And so when I go to this review, you'll see there's a match. or record as a transfer. Maybe it's not really an expense. It's just you moved money from checking to savings. So that's not really income or expense. It's just a transfer. But if you do match, what it's trying to signal to you there is that, hey, you already have a $200 transaction from the same vendor on or near this date in QuickBooks. Now, this is an item that's coming in from the bank feed, and it's saying, hey, are these the same thing? So I should match them so I'm not duplicating it? Or is it definitely a different transaction? So if it was a match and you clicked match, it would show you other transactions that are similar to this one. And if there's an exact, there isn't an exact one here, so it may not be any of these. This may actually be a separate transaction. Usually when they're identical, you will get the match option right up here in this line item. You wouldn't even have to go to review. It might say match instead of review. So just be aware that you don't duplicate things. If you are entering some stuff into QuickBooks, and then later it's coming through the bank, you may have that match situation. And that's particularly relevant in terms of deposits. When you make a deposit to the bank, it usually includes a number of payments, right? You're not just to every check that you get from a customer, you don't take that to the bank right away. You group them together and you take them as one. But in order for QuickBooks to know that a payment has been received from a customer, you have to put it into QuickBooks specific to that customer. And then you group them together in a deposit in QuickBooks. So now I have, 5 $200 checks. I'm making a deposit for $1,000. I want QuickBooks to know that all 5 of those customers made their payments and that those are 5 payments that are grouped together in this deposit. So I'm going to do that within QuickBooks. And then when it comes through from the bank that there's a $1,000 deposit, I'm already going to have that $1,000 deposit entered into QuickBooks. So now I'm just going to match it up with that bank feed when it comes in and not duplicate it. If you're not keeping track of customers, you could probably just count that as a deposit and not enter in the detail. But I mean, that's one of the reasons why we use QuickBooks, right? Is we are keeping track of that level of detail. And that would be the way to do that. You can also set up rules within QuickBooks. So if we look at this, you can create a rule that every time you get a transaction from a certain vendor, you want QuickBooks to do something with it, something specific, and the same thing every time. So if you have a, like one gas station that you use for all your company vehicles and you have an account there. So every time there's a charge into your bank account from that company, you want it to automatically assign it to gasoline expense or automobile expense. That's how you can set up the rules, so that transactions that are the same over and over and over again are going to get handled the same way. You can also create recurring transactions. So you can have that set up in QuickBooks automatically. And then when that transaction, that, for instance, the building lease is scheduled for every month at the end of the month to happen for this amount, and it's going to go into this tied to this vendor. This doesn't show it here, but if we look at the actual recurring transaction, it'll show you what account you want affected by that. And actually, this is a recurring bill. So this is a bill we're creating. We're billing somebody else. It's not an expense we're paying. I misread that. So it's a bill that's going to get charged to building lease, the lease or rent, and then we're going to write a check to pay that bill. So you can create recurring transactions as well, and then QuickBooks will automatically remember transactions too. If you don't have a recurring transaction, but you're writing a check every month to Hall Properties and you're always charging it to building lease, the next time you create a check to Hall Properties, it's automatically going to remember that that's going to go to building lease because that's what you've been doing in the past. So it's kind of smart that way, as far as helping you limit your data entry process. If you're not using bank feeds, you won't have this activity here. You'll just have to use all the functions within QuickBooks to manually enter every transaction that you have. So that's what I'm saying. You're not required to use bank feeds, but it does save a little bit on the data entry. Probably the one downfall about bank feeds and using bank feeds alone is it's hard to track if there's a missing check, because if you're just accepting what's coming through the bank and you're not actually entering the checks individually into QuickBooks, well, how are you going to know that there's an outstanding check if you haven't put that check into QuickBooks? So that's just something to be aware of, to watch. Find some other way to track that. If you do a report that shows all the checks that have cleared and there's a missing number, then that would be a clue about how to find that information. All right, so that's how we handle checking account things. And as you're categorizing these, that's where it's categorizing it as income and expenses. So you're kind of, taking care of creating your financial statements as you're entering these transactions. If you weren't using the bank feed, you could just go to the expense tab, and then you could create a check or create an expense, like a credit card fee or an automatic withdrawal that doesn't have a check number tied to it would be an expense. And you can just create those and create who you're paying them to and the amount. Let's just click on one of those. What account it's coming out of, the date, what category it's coming out of, what's the amount. And then when you save that transaction, it's going to save it into all your financial records and create basically your checking account register, which we probably should go back and look at that. So let's talk about sales. Couple things to keep in mind with regard to sales. QuickBooks is set up to allow you to get detail on different sales categories. So when we look at our chart of accounts, and let's just go do that again. We have different sales categories, and then within each of those sales categories, they're tied to different products and services. So this company has many types of income that they are generating. It's not just showing up on their financial statement as just purely sales or revenue. It's design income, it's fees billed, it's landscaping services, it's pest control services. All the different things they do, they have a sales category for.
Hey, Kelly, you're on mute.
Thank you. Sorry about that. So we have different income types for this, or income accounts for this company, but we can do even further categorization by using products and services. So for instance, this pump category, let's look at that. That is tied to the income account of sales of product income. So every pump that's sold, and probably every rock fountain and lighting, some of these others, all those things that are sold, we can see the detail if we look at a product and service activity. but on our financial statement, all the sales are going to roll up into this one income account. So the products and services give you a way to track detail of the things that you're selling. It also then allows you to put that detail on an invoice where you can show that you sold a pump to that customer, and allows you to break down that more detailed for your customer. So just keep in mind that you have that segmentation level. You know, if you think about a bar or restaurant, for instance, they maybe have a food category, a beverage category, and a merchandise category. And underneath of all of those, they could have a list of every food item that they sell, every, drink item that they sell, and every service item or merchandise item that they sell in their products and services lists. So that gives you that level of detail should you want it. Let's look at back to here. So if you noticed, when I click on sales, now I'm already in there. There, you see, we have the categories of overview, all sales, invoices, estimates. Those are also the same categories that are up here. So once you're in the sales screen, you still have access to all of these items right here. So we are looking at the products and services. We are back to overview. That kind of gives us that quick actions. This is like the dashboard just for sales, for instance. And then if we want to look at all sales transactions, we have that tab. We have invoices, estimates, sales orders. Sales orders is a function that's not available in the lower end of QuickBooks. I've got like the accountant's version here, so that's available there. What I want to look at is the customer. Here's how you're going to get to the customer list, is in the sales function. So if we look at this current customer and we click on that customer, we can see the type of information that's collected in the customer record or included in the customer record. So right up here is kind of additional, their main information, their phone number, their address, or their email address are there. Their billing address is here. Down below, you have transaction data, statements, recurring transactions, other customer details, and late fees. So as you click on each of these, your data is going to change here. Within this data set, you can edit it. You can do some batch actions to those things. Like if they had 3 invoices and you wanted to receive payment on those, you could do some of those things here. Customer details, that gives you kind of an information about, or a view of what kind of information you can collect and store about the customers in your QuickBooks. If you want to edit that data, if you click on the edit button, then you'll come into this customer record and be able to add all that information. When you create a new customer in QuickBooks, it's going to prompt you to this spot for you to add the data. And you can add as much or as little as you want, but there are certain things. Customer display name, there has to be a customer name, bare minimum. That's the only thing that's required. You don't have to put in all the other information, but eventually you'll probably want that information in there, so you can always come back and do it later. If you do, or if you're in a hurry, you can just put in the name and that's it. Here is where you can create new transactions for this particular customer. So, and again, another way to get at that activity without going up to the plus function there. Let's see, what else do I want to talk about? Let's go back to that edit customers. One thing to keep in mind with regards to customers is things that you want to have that would affect billing. Do they have payment terms, for instance? This particular customer does not. You can type your customers. Like this construction company, maybe they have residential customers and they have commercial customers. So they maybe want to categorize those for different reasons. This is also where you identify if the customer is taxable or not. So those of you who might sell to government agencies, schools that are not sales taxable, you want to make sure that this box is unchecked. Because when you create an invoice for that customer, it's going to automatically apply the sales tax rate for your company. If you notice that if this box is checked. So if you don't, and that's going to be the default, right? Because most everybody is taxable. So if they're not, you want to be intentional about coming in and unchecking that. And then you can also set the tax code. So there'll be a default tax code, which apparently is this one. But you can also have other tax codes. If you're a type of company that sells product in different locations, you may have to apply different tax rates to different customers based on where you sell them the product. If you're a storefront on Main Street and that's the only place you make sales, then you're only going to have one tax code. So just keep that in mind. Okay. One more thing, I don't know. Let's see, we'll go here. You can attach things to your customer record too. Say if you had a customer fill out a employment application, or not an employment, a credit application, you could scan that in and attach to your customer record. Okay, let's talk a little bit about products and services. So the biggest distinction to be aware of with products and services is the use of the inventory. Let's just go to new here a second. The inventory items are treated very specifically in QuickBooks. And so just you want to be aware, a lot of times it might default you to do that, and that may not be how you want to handle it. So these are the options available. I'm going to start with the middle two first. So service options are like if you're doing lawn care or you're selling labor to repair a car, that's service. You're selling labor, basically. You're not selling a tangible good. You're selling a service. Non-inventory is actually a tangible good that you're selling, but it's not something you're going to track quantities of. A good example of this would be a special order item. You don't keep that in stock in your store. It's a special order. So you want to track the fact that you sold that physical item, but you don't want to count it as part of your inventory because you don't stock that. And this is also the option you would use if you don't want to use the inventory function in QuickBooks. You may want to keep track of how many items you sold, but you really don't. You either don't have a lot of inventory or it's manageable, that you don't need QuickBooks to tell you you have 5 items in stock. You can see by what's on your shelf or what's in your storeroom what you have in stock. So if you choose not to track inventory in QuickBooks, this is the type of product you would create for a physical product. With the inventory product or the inventory item, well, let's just go back quick. If we look at the service item, when you create a service item, you have to have a name. You have to choose an income account. Where do you want those sales to show up? You can put the price or rate in there, but if you don't, if it's a generic, if this is, again, the restaurant that has a beverage category or they have a beer category, the sales price of every beer is going to be different. So they might not put a rate in there. They might leave it blank and just fill it in when they do it. So that's an option. And then the other thing is this item taxable? In some cases, some items are not taxable. Not too many of them in South Dakota, but in other states or in certain industries, there are things that are not taxable. So those are the main things you're going to put in there. What is it? What income account do you want it to be charged to? Is it taxable? And do you want to include a rate? And then when you choose that item, as you're creating an invoice, the data that's in this field is going to populate on there, and then you can edit it further from there. So the same thing then with a service item, it looks very similar. A name, an income account, maybe a rate. Is it taxable? Do you want to include that information? So those are very simple. It's just tracking the sales side of the transaction. Now, when we get into the inventory item, we can see there's a lot more going on with this. And the reason that is because when you put in a physical product as inventory, it's going to track your quantities on hand. So that means when you're doing your bookkeeping in QuickBooks, you're not just tracking the sales side. You also have to track the purchase side. So if you purchase a case of candles and you're selling those candles individually, you're going to purchase that case and say, okay, that's 12 candles. That 12 candles is now going to be in my inventory. And then when I sell a candle, it's going to come out of my inventory. So when you use the inventory item, you have to track both the incoming quantities and the outgoing quantities. And QuickBooks is tracking it for you, but QuickBooks doesn't know you bought that case of candles unless it tells you, unless you tell it that that's what you're buying. You're not just buying product to resell, you're buying 12 candles to resell. So when you're using the inventory function, you have to keep in mind that you have to track both the incoming purchases of those products, and then when you sell them, it'll track the outgoing of it. And the reason why there's more going on in the item itself then is it handles the accounting functions of that as well. So of course you have a name, you have what accounts are, what income account is coming out of, and whether it's taxable and whether there's a rate, but then there's also this inventory asset account. So when you buy the 12 candles, the value of those 12 candles is going into your inventory account. And then when you sell the candle, the income is coming into the income account, and it's coming out of an expense account called cost of goods. So your inventory goes down, your cost of goods goes up by what you paid for the candle, and then your income goes up by what you sold the candle for. So there's just a lot more moving parts. It's a great feature. It works very well if you set it up right, but I've had a lot of people use inventory, not really fully understanding it, and pretty soon they've got a bunch of negative quantities because all they did was use the invoice to sell the product. They never recorded into QuickBooks when they purchased the product. And then that makes a mess you have to go back and fix. So just be aware that that is out there. The one other thing we didn't point on is a bundle. So it allows you to bundle certain products and services together. A good example I like to use is if you have an oil change business, you know that every oil change that you sell is going to include an oil, filter, and labor. So you could create a bundle that said oil change, and then you could include your oil, filter, and your labor in this section. So every time you put oil filter on an invoice, it would affect these three categories. It's a way to make your data entry less. If you don't have to put those three items on an invoice, you can just put oil change on an invoice and it'll take care of it in the back end. So if that applies to your business, that's something that can be helpful. Let's see, anything else I want to talk about with products or services? That's it. So let's go back to our sales category. So we're there. Let's go to the sales. So this is all your existing sales. And when you create a sale in QuickBooks, you have two options. So if we look under new transactions, we really have two options for recording a sale. One is the invoice and one is the sales receipt. And I don't see sales receipts up here, but that might be because this company doesn't use a lot of them. But it is an option. And the difference between the two really only relates to how you get paid. So if you provide a service or somebody comes into your store and buys a product and they pay you for it right away, that's a sales receipt, right? You sold the product, you collected the money. The invoice is for those sales that you make that you don't get paid for right away. So if you are doing some landscaping work for a customer, and maybe it takes you a week to do the job, you're not going to charge them every day that you're out there providing services. You're going to send them an invoice for the project when it's done. So an invoice records the sale, but then it records the fact that that customer owes you money, the accounts receivable function. And then later, when you receive payment from the customer, you will lower that accounts receivable and recognize that the customer's paid you. So in both cases, on the sales receipt and the invoice, the sale itself is recorded right away. If I create an invoice for, that week's worth of work, that is going to show up in my income categories. That's going to show up as a revenue, even though I haven't gotten the money yet. So just keep in mind that that's how that handles it. The sale is affected right away. It just matters if it's a sales receipt, it's going to also affect your cash account because you got money. If it's invoice, it's going to affect your accounts receivable account because your customer still owes you that money. Let's do an actual invoice so you can see how that looks. Okay. So we want to create an invoice. And we're going to select a customer. And I just started typing 3 letters and that customer's name showed up. And if it was a new customer, it would prompt us, or I think there's actually a add new right away. And then as soon as I typed that customer's name in, it pulled in information from their customer record. Their billing address, obviously their address is not in their customer record, otherwise it would show here. But it did recognize that this customer has payment terms of net 30. So that means it knows when the due date for this invoice is. The invoice is dated today, but it's not due until 30 days later. So that information is pulled in right away. And then down here, we're going to show what did we sell. So gardening services, and we did it for 4 weeks. And this particular item, let's see, we'll say $50. It didn't have a rate, so we had to put in a rate. And then it extends that amount for quantity of 4 times $50 is $200. It is showing that it is not a taxable item, so therefore you will not see any tax calculated on it. And, obviously in South Dakota that would be taxable, but this sample company is based in California, and a lot of states don't tax services. So there's no tax on that in this situation. We also sold a rock fountain. And that did have a rate in it. And if I sold him this for something different, or he bought a really fancy one, it was $325. I can just change that. Now this one, you'll notice there is a tax applied. And so taxable subtotal is $325. There's no tax rate that shows up in here though. So we want to make sure that we add the tax rate. So, and we'd probably want to go back to his customer record and add that tax rate too. So we wouldn't have to add it manually every time. So 8% on 325 is $26. There's your taxes for a total of $551 is the invoice. Okay, so now we're going to save this invoice. keep in mind that this bottom ribbon does have some other functions into it. So if we wanted to make this a recurring invoice, you know, like the 4 weeks of gardening service, that might be a good one to have as a recurring invoice because we're probably doing this for him every week. But we're going to save this. And so now we're going to close out of this window. But you noticed as soon as I save it, this receive payment window showed up. So let's go back to our list of invoices. And let's see if we can. Here's the invoice we created. And now there's a prompt here to receive payment. So it knows the invoice has been created. It knows you're either going to do one or two things with this invoice. You're either going to edit it or you're going to receive payment against it. So if we receive payment, now it's going to put us in our receive payment window where it's going to populate his information. And let's say he paid us on the 28th. It's going to deposit it to undeposited funds, which is kind of like it's an asset account. Think of it as the bank bag that sits on your desk until you take it to the bank, or, you know, the cash drawer. You know, it's not going to go right to your checking account because we received this check today, but we're not going to, you know, walk that single check over to the bank. So we're going to aggregate those payments that we receive into undeposited funds. And this is the invoice that was paid. If the amount, you know, it pre-fills all this because it says, hey, they only have one invoice and they're probably going to pay the whole amount. But let's just say they only paid $250 of that invoice. It would then keep track that now there's $301 still owing on this account once this payment's been made. So you can change the amounts here, and it'll apply accordingly. If the customer had 3 invoices in here and we put in, okay, we got a check for $551. It would first look at these 3 invoices, and if there was an invoice for $551, that's the one it would apply it to. If the customer paid us $300, it would first look for an invoice for $300, and if it didn't find one that matched that exactly, it would apply it to the oldest invoice first. And so just know that they have some default rules. And if you said, no, I don't want that applied to that oldest invoice, I want it to apply to a different invoice, then you can just uncheck the boxes and apply it to where you want it to be applied. And there is also an option of applying credits if a customer had credits to their payments. So let's just say, got a check for $551. It's paying invoice 1038. So now we can do save and close. And now we receive payment. And if we go back to Dylan down here, it would show, again, there's no payment to receive, so that option goes away.
Does it allow you to add a late fee to an invoice if they have only paid a portion?
You have to go in and set that up under the account and settings. I think that's under sales. Late fees. So usually how that happens is you set it up, what the rate is, when it gets applied. Is it get applied back to the date of the invoice or back to the due date of the invoice? And then when you create a statement then to send out to that customer, it'll apply another line item with that rate, with that fee on it. And so then the statement will have, okay, here's the invoice, that's $551. Here's the finance charge, that's, you know, $10. So you owe $561. So yes, it does have that capability. Okay. So we've received the payment. Now let's look at making the deposit. So that we're going to have to go up to new to make a deposit. And what is showing here is all the payments that we received that are sitting in that undeposited funds account. So here's the one we just received payment on. but there's also two others. And so, okay, we're gonna take all of these to the bank. So we check them all and it adds up to 26,1352 is what our deposit is. And this is where I was talking about before. You're gonna do this work of putting an invoice in here and receiving an invoice, receiving a payment against it in QuickBooks. Then you're gonna go make your deposit and it's gonna do save and close. We're gonna have a deposit made. Then when that deposit comes through the bank feed, it's gonna match those up. And that way you've got your customer detail taken care of, but then you also have that bank deposit amount that's coming from the bank equaling the deposit amount that was actually made and what customers were consistent of that. When you receive customer payments, it automatically goes into, let's do another bank deposit. It automatically goes into that deposit. So now we just deposited everything that was in undeposited funds, so nothing shows up here. And I can always add things to the deposit. You know, let's say I wonder if I should go back. Let me see if I can. Might be easier to explain if I can go back to that. Let's go to. Gonna go back to view my register, which is my bank register. And I'm gonna find that deposit, which is right here. So I'm gonna double click on that and edit it. I want it to get back. So here's the screen of the last deposit we had. Now there might be other things that you want to add to this deposit that are not customer related. So let's say also in the mail, you received a check from your insurance company. I don't know if I have an insurance, what's the insurance company's name? Because they sent you a refund because of your workman's comp audit. So you got money back. And you could say work comp audit refund. And that was for $50. So I want to add that $50 check to my deposit. I have to add that in separately because it's not going to come through that undeposited funds because it's not customer related. So if you have deposits that you're making that aren't coming from a sale of something that you've put through QuickBooks, you can still add those to the deposit as need be. And also, if we look towards the bottom of the deposit, if we get cash back, so hey, I'm going to take out $30 to go buy, or not 30, probably $77 to go buy a roll of postage stamps from this deposit. I'm going to charge that to my office supplies somewhere in here. Oh, that's right. It's only going to let you apply the cash back to some other account. So, you know, some companies use petty cash. But if you are taking cash back out for some reason, you can do that. And let's say that's $20. It's going to lower your deposit amount by that amount. So if that's a function, maybe that's money you left back in the till or something, you'd want to take care of it that way. Oh, won't let me do this without picking an account. So, okay. So just wanted to point out that for non-customer related deposits, you have to manually enter those things in there. Okay. Let's see, we'll go over a couple more things and then we'll take a break here about 10:30. We're going to now look at expenses. So We looked at how do you receive money and enter sales, and then how do we enter expenses. If you're using the bank feed, most of your expenses are going to be entered just by accepting each of those checks that come through and categorizing those. But you can come in here and create new transactions, either checks or bills, or expenses. The thing to make note of, just like the sales side, where you can do a invoice if you don't get paid right away, and a sales receipt if you do get paid right away, you can do the same thing on the expense side through the bill function. You want to enter a bill if you want to record that expense, but you're not actually going to pay the expense right away. And normally you're seeing this with when you're buying your products that you're reselling. So you're a clothing store, you just put in an order for your spring line, and so you got $2,000 worth of clothes shipped to you. You want to record the fact that you have those clothes for sale, but you've got 90 days to pay it. So your vendor doesn't require you to pay it right away. You would enter that in as a bill, and then you would make payments on that bill throughout that 90-day period as you sold off that product. So when you create a bill, the expense for the clothing shows up, but then it also creates an accounts payable that shows you owe that vendor money. And then as you make those payments, then that accounts payable goes down. With an expense or a check, you're recording the expense right away because you're paying it right away, either through a handwritten check or a physical check, or using the expense if you're maybe using a debit card or you're using an automatic payment that's coming out of your bank. Again, those you might just track as they come through the bank and not enter the transaction specifically in QuickBooks. Kind of depends on how you want to deal with your process there. So just to give you an example of what a check looks like. Who are you writing the check to? Bob's Burger Joint, and the payment date, the check number. You would use this print later box if you're actually printing using QuickBooks to print your checks. But if you're handwriting your checks, you want to make sure that's not checked, and then it will fill in a check number for you. And if the physical check you wrote was check number 72, you can change it to check number 72, but it keeps a running tab so it knows what the next check number to be used typically is. And then you're going to decide what account you put that to, and you say, okay, lunch on sales visit to Sioux Falls or something. And then you put in the amount. And if you want to tag this to a customer, you can, but you probably wouldn't for something like this. So when this item is saved, my checking account is going to go down by $85.05, and my travel meals expense account is going to go up by $85.05. And then that's going to show up in my bank register also. If I want to create a bill, it looks similar, but now you see you have this balance due over here. So first we're going to choose a vendor. And as soon as I type in that vendor, all their data populates from their vendor record. And their vendor terms are due on receipt. So that doesn't, let's assume it was due in 60 days. It would change it. So now I'm going to record the expense as of the date of the bill, and I'm going to record the accounts payable, but I have until the end of April to pay for it. Let's just say the reason this has a 60-day term, because we are not paying our monthly telephone bill. We're actually paying for some communication equipment. We installed a new telephone system or something like that. So that would probably go not as an expense, but as a asset. Let's see, how's that down here? Okay. Well, the only thing we have in here is a truck for fixed assets, so we probably have to create a new asset account to. Let's try that, see how it works. We're gonna add a new account of equipment. It's gonna pop that up. We want it to be an asset, a fixed asset account. That's all we need to. And we wouldn't want to put a dollar amount in there because we're going to put the dollar amount in when we do this transaction. So let's just say that this was 5925.02. We spent $5,900 on a telephone system. We've got 60 days to pay for it. So when I record this bill, my fixed asset account is going to go up. Where did that go? It's not going to let me. Oh, there it is. Okay. Put a little memo in there. So when I save this bill, my equipment asset account is going to go up by 5925.02, and my accounts receivable, my balance due is 5925.02. So we're going to save that. And now when we go back to our expenses window, we can go over to the bills side and we can see that bill to Cal Telephone. And if you noticed on this expense tab, it also shows here as a bill and notes that you can schedule a payment now for that bill. So if I want to pay that bill, I want to skip this little advertising screen there. Schedule the payment. Oh, you know what? That's it. QuickBooks has this little thing in online. When you do schedule a payment, it's prompting you to use their bill payment service. So that's why it's bringing up that screen. You want to, maybe I want to go to my bills function and see what it says over there. Huh, interesting. It should give me an option to make a payment. Let's see if we go back to the bill, does it allow me to? I think if I click this, it's going to take me right back to that bill payment function. I don't want to do that. Pay bills. There we go. So we're going to pay bills. And this shows all the bills to be paid. So I could pay them all at once if I wanted, or I could just come to here, choose this bill. It's going to pre-populate the full amount due. I'm going to select an account that I want it to come out of and the date that I'm making the payment, which is going to be the end of March. And again, I don't think I want to use the schedule payment. So I want to do save and close. That's going to save and close my payment. And now that that's done, it's not going to show up in our bills list anymore because it's been paid. We go to our expense tab. It should still show there, but it shows the bill and then the bill payment. So they zero out. And when I save the bill payment, what it did is it decreased my accounts payable and also decreased my checking account. So if we go to our checking account and we go to the register, we're going to see that bill payment. One thing to note as you are looking at registers and reports, the transaction type will tell you what function you used in QuickBooks to do that transaction. So this was a bill payment. It wasn't a bill. Bills don't come out of your bank register. It wasn't a check. It wasn't an expense. It was a bill payment. So that means I entered it as a bill and I paid it as a bill. If this would say check, and I'm wondering why it shows I still owe money to Cal Telephone. Well, that's because when I paid them, I created a check and used the check function when I should have used the bill payment function. When you use the check function, it doesn't go back and tie that to a bill that was created. If you created a bill, you've got to use the bill payment function, not a check function or an expense function. So that also is something that happens quite regularly. So it's 10:30. We're going to take a quick 5-minute, 10-minute break, stretch, go to the bathroom. In my case, blow my nose. But if you have questions, put those in the chat. We'll address those when we come back from the break. Okay, I'm gonna look through the chat here. Answer any questions. Shelley, I see, has a question about how long does it inactivate the account? The account will be inactive until you change it. So it's inactive indefinitely, I guess. You can make it active again. If for some reason you decided you wanted to start using that account, you can do that. And active and inactive also applies to customers and vendors. So let's just say a customer has moved away. You don't expect to be selling anything to them anymore. So you inactivate them, but then they move back home and now they're a customer again. You can make them active again. Okay, so the next question is, can bank transactions read from multiple sources? For example, could it pull in expenses from a bank account and from a credit card? Yes. You just need to link both of those accounts. So you can have multiple bank feeds. And as we kind of looked at this particular company has three: a checking account, a savings account, and a MasterCard account that are linked. The bank, can you add the bank fees from here? So if you're talking about like when you get your monthly statement, you have bank feeds. Those are added in through the reconciliation process, and we can take a quick look at that, or we will take a quick look at that before we finish up here. For a nonprofit, how would non-cash contributions be recorded? And should contributions be recorded as products or services or within the chart of accounts? Non-cash contributions typically aren't recorded in an accounting system because there's no value attributed to it, because it's not, you don't exchange money for it. However, it kind of depends on what non-cash contributions. Is it actually a physical thing that you received and there is some value attached to it? That's probably something you need to talk to your tax person about or an accountant about. I work with a nonprofit who we have one of our donors who pays for the lunch for an event. So there's actual cash involved. It's just not cash that's coming out of our account. They're paying it on our behalf. So we have added that in as income, as a sponsorship from that vendor or from that sponsor, but then we show an offsetting expense for the food. So it's not affecting our bank account at all. It's just coming in as an income and going out as an expense. So I think it depends on the situation that you're dealing with there, Blythe. What the policy is for customer data leaks. Has that ever happened? Would QuickBooks take responsibility? That would be a question to ask of them as to where, they save that customer data, and are they covered in the case of a breach to that location? I think that might have to do with it. Where was the breach? Was the breach at the servers where QuickBooks handles the data, or was the breach at your location where somebody accessed the data through QuickBooks? I think that would depend on whose responsibility it might be. Good question. We need to ask more of those types of questions these days. What is the link to get a 30% discount through Grow South Dakota? It's the first message in the chat. The website is sbdcfinancialtools.org. It's not actually through Grow South Dakota. It's through our National Small Business Development Center partnerships. So if you don't have that, Jesse, it should be in the very first message in the chat. Is there an easy way of printing out invoices and statements in a whole group? Yes. I mentioned that to be printed later button. That's also available on invoices. So then you can batch print them. Also with statements, just the way you create statements, they're automatically created in a batch. So those are also pretty easy to print in a batch. Where do you enter service charges or interest earned when reconciling bank statement? Okay, we'll look at that when we do the reconciliation. Okay, how do you add the credit card fees when your deposit doesn't match your invoice? So I'm gonna assume that has to do with some credit card companies take your fees out before they deposit into your bank. Others deposit the whole amount and then take the fees out later, like at the end of the month altogether. And some do it with each transaction. So you would have to, when you did that deposit, you would reconcile it at that point. You would show the payment being made for the full amount because the customer is paying for the full amount of what they paid, ordered from you, whether it's, an invoice or a sales receipt. And then you would have to add another line, either if it's in the deposit function, you'd have to add one of those additional lines that are not customer related, or if it's on an invoice or on a sales receipt where you're recording the payment just at the time you make the sale, you would have to add another line to record the merchant fees. So then what gets deposited in your bank should match up. Does QuickBooks have a built-in function to allow email marketing to customers? I don't think per se. I mean, I think you'd be better off to sync to a Constant Contact or a MailChimp. I know you can email individual customers from QuickBooks, and you can download their email addresses for that, but I don't think they have that built in. Now, is there an app that you could get to include that? Possibly, but I think, probably a third party like a Constant Contact or MailChimp would be your best bet. But you should be able to download your addresses out of QuickBooks into either of those products. For credit cards, if you can't link to the card, you would be able to manually add them, and you would just use that expense feature that we and I'm assuming, Sarah, you're talking about your own credit card, your business credit card that you're using to pay for expenses for your business, and you can't link to that, then yes, you would just enter the transaction as an expense and note that it was the credit card. And there you go. Thanks, Mark. He added the QuickBooks discounts in the chat. So with that, we're going to move on to the last section here. Seems like we always don't have quite enough time to get through as much as we'd like, but these will be quick items to go through. So the one thing about the check register and the bank feeds, you really want to reconcile your bank account, because that is how you will know that everything is correct. So with the reconciliation, you're going to have a bank statement and you're going to have QuickBooks information, and you're going to sync those up. So you choose the account you want to reconcile. It has a beginning balance, which is a combination of all the transactions that have been entered into QuickBooks so far. Basically, it should be the ending balance of your last statement if you've been reconciling on a regular basis. What's the statement ending balance and the statement ending date? So I'm just going to put in some bogus numbers here for explanation purposes. Whoops, got to pick a real date here. So then when I hit start reconciling, it's going to list all the transactions in my QuickBooks related to this account. And then it may automatically mark these, but basically what I'm going to do is I'm going to look at my bank statement, and I'm going to look at these lists, and I'm going to go down my bank statement and say, yep, that's on the bank statement, that's on the bank statement, that's on the bank statement. Everything that's on the bank statement, I'm going to check off. And once that's all done, it should balance. Now, one thing I did not notice. generally in that first screen, when we do the reconciliation, there's a spot where you can enter the fees. However, since this is a bank feed, those fees may have come through the bank feed. And then you would just add them at that point. So it kind of depends on how you're working with your checking account. If nothing else, you just have to go in and add an expense line item for that. So once you've got everything in here and everything's checked here that's on the bank statement, and there's nothing left on the bank statement to be checked off, it should balance and your difference should go to zero. That's when you reconcile, you want this to be zero. And obviously I'm not going to get there because I'm not working with real numbers, but this should be zero. If it's not zero, that means something's wrong. The first thing I would look at is what is the dollar amount that's off? Is there a check listed here that maybe I missed, or that I clicked that shouldn't have been cleared, or that I didn't clear that should have been cleared? I'd look for an exact amount. If this amount is divisible by 9, that might mean you made a transaction error, a transposition error. So maybe this is 694, but it was supposed to be 649. And you might, maybe you didn't quite catch that when you were looking at the bank statement because you were kind of clicking through in a hurry. But that would be what I would go back and say, okay, let's relook at all these numbers between the bank statement and QuickBooks and see if there's something that's transposed. You could also look at the number of payments and the number of deposits that have been cleared. How does that line up with your bank statement? So I think through those methods, it's pretty easy to figure out what this difference is. If you're reconciling on a monthly basis, this should be an easy peasy process and you should get to zero. In fact, like I said, QuickBooks might automatically highlight the ones that should be cleared, and you might get to zero without even having to do much with it. So it's pretty easy process, but it's very, very, very important to do, because unless you do that, you don't know that you have everything in QuickBooks correctly. And especially if you're not using the bank feed, you're going to probably miss more that way. But even with the bank feed, you want to make sure you always are reconciling. And then once you are done, you can finish. And when this is zero, you can finish. If you force it to finish with this not being zero, it's going to make an entry in your books for an unreconciled balance, which you really don't want to do unless, I mean, if it's a few pennies, or if it's like, you know, it's $1 off. I don't want to go through this and find $1. Okay, that's understandable. But if it's anything significant, you want to make sure that you reconcile. Let's talk a little bit about sales tax, because I know that's something fun everybody gets to deal with. As you create an invoice and as you do your sales receipts, it's calculating how much money has been collected for the period. So let's say, okay, we are going to pay the Alabama Department of Revenue. Do we have any? Well, let's see. We want to look for one of these agencies. Let's do Arizona. There we go. So that means we're going to be paying these taxes here. So I choose a tax agency. That's who we're paying. Go next. Oh, we need to have these. When you set up your taxes, you're going to have to set up the rate and who you pay it to, which in South Dakota is the South Dakota Department of Revenue. Otherwise, it's not going to know how to pay those. Okay. Do we want to pay these two? And go to next. There's our active rates, and those are fine. We don't want to do anything with those. You'll have to tell it your filing frequency also. So this stuff was not set up apparently. Let's do that monthly also. Okay, well, since there is nothing to be paid there, let's look at this one. Oh, down below. Okay, select an agency. Let's do California. This has changed a little bit since the last time I was in here also, so apologize for kind of finding my way. Sometimes you just have to do that. So sales tax settings, if you need to change your sales tax settings, that's where you would want to go. When you select an agency to pay, then you see kind of under the more details, there's a recap there. This was that $551 sale that we created. So we had $325 in taxable sales. We had $200 in non-taxable sales for total sales of $525. And we had sales tax collected of $26. So this is due. So let's see if it'll let us pay it. Look at a tax liability report. Again, it shows the two payments, the one that was due and the one for this month. So this is January through February. If we want to change this, let's say we want to pay January's taxes. So we just want to run the report for January. And we confirm that that's correct. The amount of tax we have to pay is $324.54. So let's see. That is just a report. That's not actually the paying of the taxes. So not sure. The wrong one. So here's the function here. So here's the taxes that are due for January. They're due February 20th to the California Department of Tax and Fee Administration. We just looked at that liability report. And then you follow their instructions to pay. So we don't want to add any adjustments. Although in South Dakota, we often do have an adjustment because we have the sales tax collection credit. So if we have $324.54 that we've collected in taxes, but say we get a credit for 54 cents just to make it even, then we'd have to pay the state $325. So we'd want to add that adjustment here. And we want to make the adjustment date the end of the month that we're paying for. And we would have to probably create an account. And we could put it in this refunds and allowances probably. I like to create an account that says sales tax collection credit specifically. And so we're going to enter the amount as $54 or 54 cents. And I think we might have to do point or put the negative in there. Let's see if it lets us do that. Because we actually want to decrease it. Oh, and that didn't, it increased it. Oh, well, let me edit it. So let's delete. It might automatically treat it as a negative without me having to put the negative in there. So when I put the negative in there, it shoot, we found it all those. That's what it is. There. It deducted it, which is what I wanted it to do. So now when I create this payment, my checking account is going to go down by 324. I'm going to show an income of 54 cents, but my tax liability is going to be totally taken care of. So then I just record the payment, select the date that I'm making the payment, which is today, my checking account. And then if I need to print a check, I can print a check. In South Dakota, most of our payers are on their electronic ePath system. So this would be how you would record it into QuickBooks. You would still have to log into ePath to tell the state that you're making the payment, and then they would draw that directly out of your checking account. This is also an example of where you want to enter this transaction in QuickBooks specifically, not just wait for it to come through the bank feed, because the bank feed is not going to be able to record this as a tax payment. So you need to record this in QuickBooks and have that $324 transaction in there so that when it comes to the bank feed, you can just match them up. Okay. Reports. Let's look at reports. And this will be our kind of our last function here. The reports are several, not near as many as in desktop, but there's several here. So I would just go through and look at the different reports and see which ones are helpful for you. If you are liking a report and you use it a lot, just click the button beside it, and it will add it up here to your favorites list, so you don't have to go through the list every time. Let's look at the profit and loss statement here. If we click on the statement, we can choose the date range, and let's just use last year as an example. That will have the most data in it, I'm guessing. You can choose it as a cash or an accrual report. You can display the columns differently if you want. You can do different other customizations, but just to run this report specifically, here's our incomes. And you'll see these are the sub accounts where they have the individual amounts, but then it rolls it up into an income account. So now we get to our total income minus our cost of goods. Whoops, I went a little too far. To get to, and there is no cost of goods listed here. It just goes straight to gross profit. And then we have all of our expenses that are coming out of there to get down to the net income. Now you'll see these little arrows here. That means you can collapse the utilities. You've got two of these sub accounts. You can collapse those into one. So it's just showing the utilities line item. You can do that by the full account, or you can just do it individually for certain categories. You probably don't want to roll all your expenses up into one. You want to see that kind of detail. So, but maybe you don't need to see the automobile detail. So whenever you create a report, if you hover over an amount, you can get to the detail of what's in that amount, which is helpful if you're looking at an expense category or an income category and it's not making sense to you. click on and hover over that to see the detail. You can print, export, email, to whomever. This is the collapse. You can use a sort function, which you probably wouldn't use on a P&L, but let's say you had a list of sales by customers and you want to sort those by the customers that buy the most to the customers that buy the least. That would be the function of the sort. You can edit titles if you want and add notes. And then you can do other customizations, like, let's say I wanted to show a comparison. Let's see, does it let me do it here? Or I want to show columns by quarters, for instance. Now it's going to show my same report, but it's going to also break it out by quarter, which all the activity was in the last quarter. So that isn't exactly helpful, but you get the point. So again, just kind of have to play around with the reports and see which ones are valuable and which ones are not, and favorite the ones that you want. If you do customize a report and you say, hey, I always want to show that quarterly, you can save those customizations, give that report a quarterly profit and loss name, for instance. And so that those custom reports will be there. And those will show up in this list, which you can also favorite and have them show on your favorite list. So there's lots you can do with the reports in that regard. I think we've covered the basics of reports. I know we didn't get to dig into a lot of those, but again, it kind of depends on your business, which ones are helpful and which ones aren't. But with that, I know we're up against our hour, so I want to be cognizant of your time. I'm happy to stay on the call if people have specific questions. I will go back to the chat and answer any questions that are in the chat, which are none. It's just my contact information is in the chat. So again, I'd be glad to stay on and answer any questions. If you have additional questions, feel free to reach out to me. Some questions I can answer on the phone. Other ones we might have a little chat and say, okay, we need to set up a call. Maybe we can share your screen and we can get some specific help to your specific idea. This is meant to be just an overview. Everybody uses QuickBooks differently because every business is unique. So maybe we didn't cover exactly what you needed today, and I'm happy to continue that dialogue if that's helpful. So with that, I thank you for being here. We will send you the recording. We'll send you an evaluation little survey out in the mail today or tomorrow. And I'll happy to stay online and answer any questions, or look forward to hearing from you down the road if I can be helpful. Thanks and have a great day.
Yes, and just a few final items. February 28th from 9 to 10, we're having cybersecurity training, identifying threats and protection strategies. Also, on April 16th from 10 to 11 a.m., the basics of Canva. Like Kelly said, if there's any future topics that you would like us to train on, just have to let us know. But definitely watch your email for a follow-up survey and then a recording to today's events. And then finally, wish to say thank you to Grow South Dakota and SBA for making this training possible. And then Kelly Weaver from the Small Business Development Center. And then the contact information is found on the screen as well as in the chat.